Hello, my friend. Welcome to Charley Retail Invest. Let's follow the latest trend in US economy and share our recent investment in stock and bond markets. In the annual conference in Jackson Hole, Wyoming last Saturday, the Federal Reserve Chair Jerome Powell confirmed that the time has come to change their monetary policy and the Fed would start cutting interest rates in September of this year. That means the interest rate hike cycle and quantitative tightening has officially ended, and the benchmark interest rate will gradually go down as we go through the remainder of 2024 and entering 2025. The market has seen Powell's speech as a positive sign. As we all know, from a long-term perspective, low interest rate environment is beneficial to companies to raise capitals, and it will encourage further growth of stock price. If we look at the Nasdaq 100 Index ETF, QQQ's recent price change, we can clearly see that the Nasdaq Index has recovered completely from the Japanese yen carry trade turmoil in early August. Now, the Nasdaq 100 Index is only 5% away from its all-time high in mid-July of this year. However, in the past week, the stock market has been pretty silent overall, and it does not change much. Everyone is waiting for the AI leading company, Nvidia, to report its quarterly financial results for Q2 2024 on August 28th. We all know that Nvidia has been the propelling force over the past 2 years to carry the growth of US stock market. Right now, Nvidia's stock price is hovering around $128 per share, which is 10% away from its all-time high of $140 in July. If we look at the price-to-earnings ratio over the past 3 years, we can see that currently Nvidia's PE ratio is around 70. Although it's still higher than the average PE ratio for a typical tech company of 40, Nvidia's stock price is not overvalued right now if we look at its PE ratio change over the past 3 years. However, if we look at the PE ratio history of Nvidia on a larger time scale, that is from 2015 to 2024, we can see its PE ratio jumped significantly from 2022 to the end of 2023. And Nvidia's PE ratio was over 100 in 2023. Of course, later on, Nvidia's earnings did catch up in 2024 to increase significantly, which leads to its PE ratio drop down during the past 12 months, and now its PE ratio is hovering around 70. Therefore, the most dominant factor to Nvidia's stock price in the near future would be its incoming financial results. Even though the company's earnings have increased dramatically over the past 2 years, largely due to large tech companies' investment on AI servers, I think Nvidia's earnings could fall down below market expectations in later 2024 and 2025. This is because most tech companies have already completed their infrastructure in AI servers, and it's highly unlikely that they can gain net profit from the huge investment in AI in the short term. Right now, most companies are just burning cash to invest in AI without any actual profitability. As a result, Nvidia's stock price would have huge downward pressure in the next 6 months to a year. If we consider the probability that US economy may enter recession in Q2 or Q3 of 2025, I think it's not a smart move right now to invest heavily in stock index ETF like QQQ, SPY, or large tech stocks, including Nvidia. As a matter of fact, I have sold most of my tech holdings, including VOO and QQQM, over the past few days. The proceeds were largely converted to 1 to 3 months US Treasury bond ETF, SGOV, as a safe haven to decrease overall portfolio risk. In the next 2 months or so, if there's panic sell of the stock market, I may buy the dip with a small position from the SGOV holding to dip into QQQ or VOO and try to sell them high to seek for short-term capital gain. However, if we are talking about 6 months to a year from now, I'm actually quite bearish on the stock market index. Right now, from all the information we have, I anticipate a good buying time window for the stock market index to be around Q2 or Q3 of 2025, but definitely not in 2024. There's a good chance that the stock market will have a sustained correction time period as the Fed is cutting interest rate. Of course, we will pay close attention to Fed's policy change or any future stimulus package to salvage the economy. This picture shows our investment portfolio holdings as of August 27th. From the chart, we can see the largest holding in our portfolio is TMF, which is 3 times leveraged TLT. It takes over 48% of the overall cash position. We've sold 30% of TLT in early August and converted the proceedings to buy TMF, and the average cost of TMF is around $50 per share. On August 27th, we bought an additional 275 shares of TMF at $57.5 per share cost. In the next 2 weeks, if TMF price drops below 57.5 again, we will buy more TMF. This is because we are bullish on long-term duration US Treasury bonds, including TLT, EDV, and TMF. And we anticipate these bond ETFs to give us more than 20% profit in the next year. In the video published on August 22nd, we described in detail why we started buying into energy stock OXY. In the past week, we continued to buy OXY and now have a total of 410 shares of OXY stocks with an average holding price of $57.1 per share. We expect OXY stock to potentially go up 20% in the coming 3 to 4 months. When the price of OXY goes above $62 per share, I will start selling the stock and harvesting the capital gain. So right now, OXY stock takes up around 6.3% of our entire portfolio, and we do not plan to buy more energy stock or ETFs, as we would like to keep our exposure to energy sector below 8%. Our main holdings for medium to long-term capital gain are still residing in long-term treasury bond ETFs like TLT and TMF. Lastly, I would like to talk about Zoom. On August 23rd, Zoom published its financial results of Q2 2024. From the latest earnings call, Zoom's performance actually beats market's expectation by a lot, and its net profit in July of 2024 has over 2% year-to-year growth. Moreover, Zoom's net profit has reached $219 million, with a whopping year-to-year increase of over 20%. Following the great news, Zoom stock has increased over 20% in the past week, and our holdings on Zoom also had a net gain of 15%. As a result, we sold all Zoom stock on August 23rd to lock the capital gains. So from mid-July till now, our investment portfolio has a net profit of $1,920 by buying and selling 3 individual stocks, Nike, Zoom, and Starbucks. We had a net profit gain of 8% over 6 weeks, which is pretty impressive given the short time period. We hope that our recent investment in OXY and energy ETFs can follow this great trend. And that's the whole story of today's video. If you are a retail investor like myself and would like to know more about the US economy and our most recent trading activities, please consider subscribing our channel, Charley Retail Invest. Thank you so much for your time and support. I'll see you in the next video. Please take care.